What's up YouTube, and welcome back to Brokeman Finance. Today's video, I'm breaking down the Workhorse Group earnings report. We're going to talk about some things that Workhorse achieved during the summer. We'll talk about the actual earnings report, and lastly the stock price, whether it's a good buy or not after this earnings report. But the first thing I'd like to do is talk about the things that Workhorse achieved during the summer, some positive things that might kind of help give you a direction or a sense of direction on how this company is improving and how they're advancing, establishing a brand. The first thing is in June of 2020, Workhorse was added to the Russell 3000 index. This is a good move for the company because as investors, we obviously hope they make it to the S&P 500 because then our stock is going to go crazy and it's going to be a good growth, good solid company. But being added to the 3000 index, the Russell index, is a great move on their behalf. And then in July, we saw that CARB, or the California Air Resources Board, issued an executive order basically stating that Workhorse C1000 delivery vans was a zero-emission vehicle, and that met all the requirements set forth in their regulations in order to achieve this executive order. Then we saw that Workhorse delivered two of the C1000 delivery vans to Ryder as far as a peer review and allowed them to see what type of product that Workhorse was producing and how it would fit into Ryder. They also secured an additional $70 million in financing from a single institution, which gave them much needed cash on hand in order to work towards fulfilling these orders. Then they saw an initial purchase for 20 C1000 delivery vans from E-Trucks LLC, a company based in Cincinnati, which really showed that, they had the two trucks initially with Ryder, then they got an order for 20 more vehicles, and they was kind of picking up steam or gaining steam as they was moving on during the summer. And finally in July, Workhorse achieved the HVIP eligibility notification from CARB, or the California Air Resources Board. Basically, this is a program that, since it's a zero emissions vehicle, they're eligible for a monetary voucher up to $50,000 per vehicle. So what this means is, as a consumer or as a fleet in California, if they purchase the Workhorse vehicle, they're eligible for that voucher basically as an incentive to continue purchasing vehicles that produce low or zero-based emissions. And then here in August, we saw that the Lordstown Motor Group, Workhorse basically are into an agreement backed by GM that was full of mergers and acquisitions, and which we'll talk about a little bit later on in the video. So let's talk about the actual earnings report. Now, Workhorse for Q2 2020 reported they brought in or had a sales report of $92,000. Compare this to Q2 2019, where they only brought in $5,500. Now, the experts was really anticipating closer in the $200,000 range, closer to the $300,000 range for sales reports. So it basically come under as expected, and they had a net loss of around $131 million for Q2. But here's why I'm not too concerned about the Q2 earnings report or the Q2 net loss as of yet. As a statement published by the CEO and Workhorse, they're still on target to produce and deliver around 300 to 400 other vehicles to consumers this year in 2020 alone. Those sales alone for those vehicles is really going to be the telltale sign going into Q3 and initially into Q4 on a sales report, if they're able to continue building on these sales reports. Even though they come in lower than expected in Q2, I really think that they're able to really hit the $300-400 target mark on these vehicles. It's going to really carry them over to Q3 and have that positive earnings and hopefully beat the analysts' expectations. And ultimately, if they have a strong sales report, they'll probably don't have a shrinkage in the net loss and get closer to working in the black instead of running in the red. The good thing too is Workhorse come out and said that even though they had the net loss of $131 million and the dismal sales report, they still roughly have about $105 million cash on hand going into Q3. Workhorse, again, is a newer company. They're still establishing a brand. People are still evaluating whether their product is worth the buy, if they're going to start changing their fleet like UPS, USPS, and etc. to start purchasing these vehicles. It's a really telltale sign in Q3, Q4, as I mentioned before. However, this company has a lot of potential, a lot of upside moving forward in the next Q3. So if you're paying attention to the news, Lordstown Motor Group, as we mentioned before, and Workhorse are basically strategic partners. Steve Burns, the CEO of Lordstown Motor Group, is the former CEO of Workhorse, and Workhorse owns a 10% stake into Lordstown's Motor Group. Now, Lordstown Motor Group is also backed by General Motors, which Lordstown Motor Group purchased one of their plants in Lordstown, Ohio. Now, this video isn't about Lordstown Motor Group or an evaluation of the company. However, Adam did a really good job of breaking down Lordstown Motor Group and what the merger and acquisition means to his investors. And if you're interested in learning more about Lordstown Motor Group and how it ties in with Workhorse, feel free to check out the link below, and it'll give you a more in-depth evaluation of the company. Now, of course, we saw Workhorse stock take a dip after the earnings report. Again, most of the analysts expected for it to take a dip and to be affected by the net loss and the dismal sales reports. However, as I've mentioned in my other Workhorse videos, this is a long-term growth stock, meaning you're not going to buy in at $15, $16 a share, and 2 weeks from now it's going to hit $25, $30 a share. It's probably not going to happen. Obviously, anything may happen in the stock market because there's so much unknown, so much uncertainty, especially with the coronavirus. However, this company has to continue to build their brand, increase their sales, get out of the red and start working the black. And if they're able to meet those things and get more and more orders and contracts, they're going to achieve the goal of building their company and basically growing that stock. And us as investors, we're going to see that stock price continue to build. And lastly, remember, Workhorse is still one of the 4 remaining companies that is awaiting the contract by the USPS, or United States Postal Service. This contract is worth up to $6 billion. And if Workhorse can get a fraction or even get the whole contract, it's going to do wonders for this company. But more importantly, it's to do wonders for the stock price as it moves forward. Remember also, Workhorse is the only all-electric vehicle option in this contract that USPS is deciding. Guys, thanks for watching. That's all for today. If you like the video, please hit that like button and or hit that subscribe button. Leave some comments in the comment section if you think we're on the right track with this. If you disagree with our analysis, we'd love to hear from you, because ultimately the good, the bad, the ugly is what makes us better as investors, and we continue to learn and develop ourselves.